Hello guys and welcome to this trading video. My name is Shane here at AwakeFX. Now in this one, I'm going to be speaking about turtle soup. What turtle soup is in relation to the financial markets and charting on the charts. Now, there has been a few people who've asked me to do a video on this. I'm very happy to do so. But just to give you a little bit of history where the term turtle came from in relation to trading, there was a trader originally called Richard Dennis in the 1980s, and he was a very well-known trader who had a trading setup which was called the turtle trading setup. Now, this setup was a breakout type strategy setup, and he had a group of traders that actually worked with him, and he taught this group of traders how to trade using this turtle trading strategy, and many of them went on to become millionaires afterwards. So in the video I'm going to tell you a little bit about that strategy, then we'll talk about what turtle soup is in relation to the financial markets. So without further ado, let's have a look at the charts. First of all, guys, I'd like to recommend a book to read. I read this a good few years ago. It's called The Complete Turtle Trader. It's from a gentleman called Michael W. Covell. But the book is about Richard Dennis. Now, Richard Dennis was quite a famous trader in the 1980s. He was legendary in the fact that he taught a number of other traders his trading strategy, which was called the turtle trading strategy. And many of them went on to become millionaires. So it's a fascinating book. If you want to learn more about what the turtle trading strategy is, check out that book. But moving on, what is turtle soup? Turtle soup is a little bit of the opposite of the strategy that he used to do in that book. So for example, what Richard Dennis taught in the turtle trading strategy was that when price gets to a certain point, let's say a specific high point, let's say like here, in turtle trading, many traders would look for buy trades or to go long when price breaks a potential previous high or previous swing point. So for example, when price gets up here to this level, Richard Dennis was teaching people to buy the breakout. So buy above this level here. And why would you do that? Because you're looking to go long for the expectation of price to continue higher. So that was what the turtle trading strategy was, and it's very, very basically explained. There's a lot more rules about how many days back, what highs and lows you use, etc., etc. But in a nutshell, it was a breakout type strategy, and it worked very well in the 1980s and that, because obviously we didn't have as much algorithmic trading that's going on now. So the markets have kind of changed a bit, and if you try to trade breakouts, it can be a very, very risky type of trade to take. You know, you may buy a breakout, then immediately price comes back into the range and stops you out and does not continue that move. So what is turtle soup? So if we go back to this idea that there are many times in the market when price is in an uptrend, or price may start, let's say a new session. Let's say this was the start of a trading session here. And what you might see is there may be a previous high like this. And then once price gets up to that previous high there, what turtle soup is when price takes out the high, takes the liquidity that's above there, and then reverses to go the opposite way. Sometimes it may have even a slight higher high, and then the market shifts and breaks and we have a move lower. So in essence, turtle soup means it's a false breakout. It's another word for a false breakout at a previous high, or a false breakdown at a previous low. So anyone who was trying to go long above these highs would be made of soup of, okay? So they would be destroyed and the market would come down and stop them out and they would lose. So hunting for turtle soup type trades, in essence, what you're doing is you're looking for previous highs to be taken and price to then reverse and look for a short trade to move lower. Now, the opposite is true with a turtle soup long. So let's say price maybe it could even have a double low like this, for example. It could be equal lows and price has moved away. And then during the trading session, price can come down and just take out a previous low. It might only be by 1 pip, 1 tick. Sometimes it can be by a few pips or ticks, okay? But this actual act of price breaking down below that swing low and not continuing lower, and instead reversing in this area, can be an opportunity to get a long. And in that long trade, you would be targeting previous highs, previous buy-side liquidity levels that are above the market. You know, we may have, let's say, even back over here, a high all the way here, let's say on the left up here. we have a breakdown of a low here during the trading session. Price reverses, and you may go long in this area here. You buy with expectation price moves to previous highs here. You may take out a partial exit, and you may take all your trade off, let's say at a previous high up here where there would be buy side liquidity resting. So that's all turtle soup is. It's a false breakdown at lows and a reversal higher, or a false breakout at a high and a reversal lower. Just think of it like that. It's a false breakout, okay? And there's many different ways to trade turtle soup in here. Many different ways to do it. So for example, price may make a new high here, may pull back, make a higher high, and there could be a market structure level here. This would be the last low before price hits this new high. So potentially a breakdown below that low there would be a market structure shift. So a retracement higher, that could be your short entry here, for example. And there's many different variations of how you could potentially enter into a trade here. Sometimes we make a high with a pullback. We might have even a lower high here and a breakdown. There may be alternative reasons to get into the trade down here. There could be some kind of breaker here. There could be a Fibonacci retracement, as I spoke about in my previous video, into maybe a 50% level. Price may pull back into a Fibonacci short. There could be fair value gaps up here in this area to potentially short from. But the turtle soup itself is the false break, which initiates the hunt for these potential shorts. And then in relation to longs down here, you might have price break lower, price can make even a lower low, and then price break structure here. And then you're hunting then for a potential long setup, because we had a turtle soup occur here at a low. What is turtle soup? It's just a false break. It's not a setup in itself. You still have to hunt for some kind of entry criteria, okay? You may need to have a market structure shift, a pullback, look for that kind of move higher towards previous highs, or maybe some kind of external range liquidity. It could be a high from a previous day or something like that, which may be much further away. So that's all turtle soup is. Just wanted to keep this short and simple and to the point, guys. Thanks very much if you've made it this far in the video. I do appreciate each and every one of you who do subscribe to the channel. See you in the next video, and please make a comment down below if there's any videos you'd like to see, and give us a like as well. Take care. Happy trading. Bye-bye.